The impact was immediate. Canola futures crashed in Winnipeg, and prairie farmers faced a market worth nearly $5 billion suddenly closed. The financial hit was severe, with many farmers fearing for their livelihoods. This wasn't just a trade dispute, it was an economic earthquake for Canada's agricultural heartland. The ripple effects were felt far and wide, affecting not just farmers but entire rural communities. The Canola Council of Canada confirmed the worst exporting to their largest customer was now impossible. The council's press conferences were filled with grim faces and dire predictions. Accusations of dumping stung, as Canadian farmers and officials denied any unfair practices. They argued that their farming methods were fair and competitive, and that the tariffs were unjustified. With a bumper crop maturing, farmers now faced a massive surplus and plummeting prices. The storage facilities were overflowing, and there was no clear path to market the excess produce. Decades-old supply chains were broken overnight, threatening rural livelihoods and entire communities. The economic stability of these regions was now in jeopardy, with many fearing long-term consequences. The shock quickly hardened into resolve. This was a geopolitical test, a wake-up call about the fragility of global trade. Farmers and officials alike began to strategize on how to navigate this new reality. Canada was forced to confront its dependency on a single market and begin charting a new, more secure path forward. The nation started exploring alternative markets and diversifying its trade relationships to ensure future stability. To truly grasp the magnitude of the crisis, you must first understand canola's immense significance on the world stage. This tiny black seed is far more than just a crop. It's a linchpin in the global food system, quietly powering economies and feeding millions. Born from Canadian innovation, canola is a cornerstone export, supporting tens of thousands of jobs and symbolizing national ingenuity. Its golden fields stretch across the prairies, representing not just agricultural success but also the spirit of Canadian research and resilience. For many rural communities, canola is the heartbeat of local economies, shaping livelihoods and futures. China, the world's largest importer, relied on Canadian canola for cooking oil, animal feed, and even biofuels, making the trade relationship vital for both nations. The flow of canola between these two countries was a symbol of mutual benefit and trust, woven into the fabric of daily life and industry. The sudden closure of this artery left Canada with a daunting surplus, and China scrambling for alternatives. Silos overflowed and uncertainty rippled through farming communities, while Chinese consumers and businesses faced shortages and rising prices. Canada, the global leader in canola, now had to find new markets for millions of tons. No easy feat. Exporters hustled to redirect shipments, but building new trade relationships takes time, and the world market was already competitive. The crisis exposed the risks of over-reliance on a single buyer, and forced a reckoning within the Canadian agricultural sector. Farmers, policymakers, and industry leaders gathered to strategize, realizing that diversification was no longer optional, but essential for survival. For China, replacing Canada's supply was a logistical nightmare. Other producers like Australia couldn't fill the gap overnight. The global supply chain was stretched thin, and every alternative came with its own set of challenges and costs. Chinese importers faced higher costs and supply disruptions, showing the double-edged nature of weaponizing trade. The ripple effects were felt in factories, kitchens, and markets across the country, highlighting just how fragile these connections can be. The tariff hurt both sides, revealing the complexity and interdependence of global markets. What seemed like a simple policy decision quickly became a lesson in unintended consequences, as businesses and workers on both continents felt the strain. In a world so connected, trade disputes rarely leave anyone unscathed. The canola crisis was a stark reminder that in the global dance of commerce, every step, no matter how small, can send shockwaves across continents. The canola tariff was the latest escalation in a series of mounting tensions between Canada and China, marking a significant turning point in their economic relationship. What began as a disagreement over trade practices quickly evolved into a broader conflict, with both sides digging in their heels. Tensions had simmered since Canada imposed tariffs on Chinese electric vehicles in 2024, citing unfair subsidies and a need to protect its own auto industry from what it saw as aggressive competition. China's response was swift and severe, fulfilling its threat of retaliation by targeting key Canadian exports and sending a clear message that it would not back down. In previous years, China had already targeted Canadian agriculture with bans and duties, using its vast market as a powerful tool for diplomatic leverage and economic pressure. Hopes for a thaw after a conciliatory call between leaders in June 2025 were dashed by the new tariff, which reignited old grievances and deepened mistrust. The dispute was now about more than trade. It was entangled in national pride, strategic rivalry, and the struggle for influence on the global stage. Saskatchewan's premier urged dropping EV tariffs to reopen the canola market, but Ottawa hesitated, fearing that backing down could set a dangerous precedent for future negotiations. Canada now found itself defending its interests in a high-stakes geopolitical standoff, with both economic and political consequences hanging in the balance. The path to resolution was now fraught with political and economic complexity, as both nations weighed their next moves in a dispute that had become deeply personal and symbolic. Canada's response was swift and united. Trade and agriculture ministers condemned the tariff, rejecting China's anti-dumping claims and defending Canada's fair market practices. The government pledged to support farmers, challenge the tariff diplomatically, and, if needed, take the fight to the World Trade Organization. Industry groups and provincial leaders echoed this resolve, mobilizing to provide support and demand action. The message was clear. This was not just about canola, but about defending the principles of free and fair trade. Canada's united front reassured farmers and signaled to the world that it would not be bullied. The disappointment was real, but so was the determination to fight back. The stage was set for Canada to pivot from crisis to opportunity. Instead of despair, Canadian farmers and industry leaders launched a bold pivot toward diversification. Trade missions targeted new markets in Southeast Asia, the Middle East, and Latin America to absorb the surplus. At home, the crisis accelerated investment in biofuels, with canola oil powering a new push for biodiesel and sustainable aviation fuel. Processing plants expanded, creating jobs and capturing more value domestically. The industry shifted from raw commodity exporter to value-added producer, building resilience for the long term. Research into new uses for canola, from bioplastics to food ingredients, gained momentum. Farmers became key players in a green economy, turning adversity into innovation. The pain of lost markets was real, but so was the sense of purpose. Canada's canola sector was reinventing itself, proving it could thrive beyond China. China's tariff sent shockwaves through the global oilseed market. Suddenly, China had to replace millions of tons of Canadian canola, a task no single country could handle. Australia, the next largest exporter, saw opportunity but couldn't match Canada's scale. Chinese buyers scrambled for soybeans and sunflower seeds, driving up prices and straining supply chains. The move exposed China's own vulnerability, as food and feed industries faced higher costs and uncertainty. Meanwhile, Canada's aggressive search for new buyers began to reshape global trade flows. As Canadian canola found new homes, other suppliers were displaced, creating a domino effect worldwide. The episode proved that in a connected world, trade wars create winners, losers, and plenty of unintended consequences. The initial shock of the tariff was brutal. Prices fell, warehouses overflowed, and farm families faced real hardship. But out of crisis came resilience. New export contracts and domestic biofuel investments stabilized the market and offered hope. The experience taught Canada the dangers of over-reliance and the value of diversification. Investments in value-added processing and green energy became long-term assets, not just quick fixes. The canola crisis became a lesson in adaptability, innovation, and national resolve. Canada's agricultural sector emerged stronger, more self-reliant, and better prepared for the future. The golden fields of the prairies now symbolize not vulnerability, but victory through adversity. Canada's response turned a potential catastrophe into a story of reinvention and triumph.